Hi everybody, Alex Employer from Expert4x. Welcome to today's webinar. We're going to be looking at the Forex markets. And as always, if you do have any questions, comments, remarks, please send them through and I will deal with them in the course of the webinar. Thanks for, I see one's already come through. Let's have a look. When doing backtesting, should the optimization box be checked or not? What does it do? Okay, I'll deal with that question before we even start. Basically, when you want to optimize a EA and you use the strategy tester, it brings up the strategy tester. And then in a normal setup, there are a lot of EAs, but there's also the free one called the moving average one. And I'm actually going to use the moving average EA to test this. I'm going to use the euro. I'm going to use open prices because that's the fastest method. And I'm going to use March to April to yesterday. So it's about 6 weeks. And I'm going to click that. I'm going to say use those dates, six weeks. I'm going to say, all right, use the current spread that exists at the moment and use the 1 hour period. So I'm setting this up for testing. So let's just go and test it, and I'm just going to untick what I did previously, and I'm just going to create some random numbers here. So because that's what I'm going to try and return the default ones. So here is the EA. There are 5 settings that you can change in this particular EA, and that's how EAs run. So there are the settings. So what happens there, if you click OK and you click Start, it is going to run those settings only. So that it'll run the default settings. So let's do that and see what results we get. Okay. So here those settings that I put in there has resulted in a loss of $33. Okay, so that's not great. You know, we don't want a loss of $33. So what we say is the biggest factor in this moving average EA is the actual moving averages. So I'm going to actually say, all right, instead of 12, I want to test a range. I want to test from 2, increase it by 1 every time, to 20. And instead of 4, I want to test the range 1, increase it by 1 to 10. And then I'm going to click on there. And by clicking there, I'm telling the EA, or I'm telling strategy tester to optimize those settings. In other words, test for the best combination of those settings, testing all of those ranges. So that's a range of 20 and that's a range of 10. So it's about 300, could be a 300 or just under 300 various options. So then I say, okay, now if I click on the optimization box, it's going to listen to those 2 green ticks. It's going to listen to it and say, oh, my job is to optimize those green ticks. So you click on it, and now this machine is very fast, so your machine won't go that fast. So I say start, and it's done 190 variations of the options, and it's come up with a result of $176 as the best result. And the best result is if the moving average is 7 and the moving average shift is 9. So what I'm going to do now is I'm going to highlight that, right click, set as input. In other words, when you click on that, it's going to move that 7 and that 9 to the settings. So click on it. So now we go there, and the 7 and 9 is now in the settings. So we know those are the optimized settings. We say, okay, and we now run it without the tick, because the ticker is the optimization function. We want to just see the results. And we go and we look, And there we are, 176. So that's now, so what I've shown you now is how to run an EA just normally on the strategy test, and then how to select some settings that you want to optimize, how to get a range that you want to optimize, the green ticks you put in, and then you optimize your EA. All right, there's a little bit more to this, and I'm going to show you. Thanks for that question, because I like using these sessions as support questions for that. Now, there's a little bit more to that. So what we do is we go to the optimization chart, and this shows you the results of the various settings that we've used. So on this side, it shows the offset, moving a shift, or the shift, and that shows the period, and that shows what has been tested. And white means not profitable or low profitability, and the darker the color. So there's your best, there's the best result. Now, looking at this chart, it's what it's telling me is that this is a lucky optimization, because it's found one in the middle of a really bad set of optimization. So this EA is actually a very inconsistent EA. So that is the best one, and that's the second best one, and then you find the next darkest green one will tell you. And this is actually very bad. I'm just going to see if I can. Now, when you're testing a lot of numbers, you have to use this genetic algorithm, because it will turn tests of about, let's say, 100,000. It will turn them into about 10,000. But I'm going to unclick this. I'm going to run this test again and just see. We run the test, so I make sure that those are green. We optimize it again, and we run it again. I just want to see if that carpet changes at all. No, it stayed the same. Okay, so but that this carpet, and the way you get here is you click on 2D surface. If that's unclicked, that's what you will see. If it's clicked, you see the green carpet, which gives you all of the combinations of. This is actually a very bad EA, because it's a bit of a hit and miss whether you're going to get the right settings or not. What you want to see is you want to actually see a nice green patch like this with the darkest one in the middle, so that you've got the best chance of being successful. This one's got a white one next to it. It's got a white one there, white there. So this EA is not a good EA. I can show you examples of much better carpets. All right, so what else is there? So now I'm giving you a 10-minute lesson in optimization and what the tester does. Okay, let's have a look. I'm sorry about that first error that I made. Now let's have a look at the charts, and I'm going to have a look at the moving average, the multiple moving average. Just want to see what the status of the market is. Just get a feel. And here you can see the pound has been trending up, and then suddenly it's changed trend and it's gone down, and that's quite clearly visible by the moving average, multiple moving average charts. Same thing here, trending beautifully, and then suddenly it moved down. Trending beautifully, suddenly moved down. So it's telling me a few things. And the same thing here, trending downwards, suddenly moved up, trending downwards, suddenly moved up. Not as bad as the others, but moved up, and the same thing there. So what I can tell from here is that something happened in the last 2 days that strengthened the US dollar, because this is strengthening the US dollar, that's strengthening. So something has happened to do that, and it could be Trump's WHO decision, or it could be something like that. But certainly the US dollar has strengthened, and there's been a reversal, strong reversal in most currencies. Then if we look a little bit further down, we look at the euro. In this column, I've got all the yen crosses. So the pound yen, the Aussie yen, and the euro yen. Now you can see a lot of them have the same profiles. You see, it's like a little hockey stick type of thing. The Aussie, not quite, but a lot of them have the same profile. And when they have the same profile, they are, you know, we call them yen dominant or US dollar dominant. Now here the US dollar is dominant because it's causing the same profile on all of the charts. Then we just look at some random ones. The euro Oz strengthening there, but here's the big one. I mean, this is, let's see how much this is. This is 450 pips, this move, where the pound New Zealand has strengthened amazingly there, and the euro New Zealand has strengthened. So obviously the New Zealand most probably has weakened, and these currencies have managed to overpower it. So there's a lot to be told from this. Just another observation here is that we had a situation here in the yen where the moving average is knotted. In other words, when they knot, they become the same color. So you can't distinguish the color there. Let's make it a bit bigger, easier to see. Make it even bigger. Yeah, that's better. All right. So when they knot, they come together in one spot where you sometimes can't distinguish the colors. They actually become like that. Now what that means is that that's the place where the market is in total agreement about the price. So the long-term traders and the short-term traders are agreeing on the same price. So it only takes a little bit of a nudge for them to start disagreeing. So when a certain amount of news comes out, they suddenly start disagreeing, or they start sorry, wrong way around. They actually start agreeing, because when they knot it like that, they unsure about what's going to happen. So they say, oh well, the current price is the best it can be, and they all knot at the same time. So suddenly something happens, like let's say it's Trump's Who thing or something like that, and then they all agree, oh no, the price should be going down. So the short-term guys say yes, and the long-term guys say yes. Now, at the time we looked at this loss, this was drawn. So what you do when you see a knot like that is you straddle the knot. In other words, you put a buy there and you put a sell there, and you let the market decide which way the break will happen. But when you have a knot like that, it will, in most cases, result in a very volatile break. So that's why you can afford to straddle the price. It's going to break, and it's going to break in a big way, and it did in fact, and that's what's happened. And it let's see what that run is. It's 180 pips from the straddle point. It's 140 pips. So that was a trade that we identified quite a long time ago. This is most probably the last week sometime, but just an interesting concept, that how you can use these multiple moving averages to do straddle trades. Here's another example of a knot. See, the prices, the colors sort of knot together to the extent that you can't tell what they are, and when that happens, you straddle and you just ride the break. There's a knot there. There's a knot there. You just find the knots, and you'll find volatile breakouts out of the knots. Okay. All right. So we're saying there's strengthening of the US dollar, and we need to look at the pound New Zealand. So I'm just going to go to the daily charts quickly and see what we can find there. All right, now, yesterday's webinar, we identified so many transactions. It was just quite funny in that here was a transaction identified, there was a transaction, there was one, and so on. So and they all seem to work to a certain degree. There's been a bit of a reversal in some cases, but certainly look at that one. That's worked quite well, and that one's worked quite well. These are the daily charts. Just a reminder. Now, this reminds me of is the case of a lot of traders think, oh, I'll trade every day and I'll and I'll make 100 pips every day or whatever. But in reality, the market is quite inconsistent and does what it wants to do. So these kind of breakouts don't happen every day. Sometimes it's been very frustrating trading when nothing much is going on. Like over there, you can see it's just going sideways, sideways, sideways. So when a breakout like that happens, it's quite. So you've got to be around firstly, and you also, they don't happen every day. Like yesterday, there were just so many signals, and I think if we go to the other daily charts, you'll even see more. There was one, there was one, there was one. So we had a lot of signals, and look how well that one worked. That one semi-worked. It actually broke out and then stopped, and then that one broke out and stopped. But so what you're going to have feast or famine. You're going to have either a lot of signals happening at the same time, or you're going to have nothing. And that's why you can't have a lot of people say, how much can I earn a day? How much can I earn a week? Doesn't happen. You have losing days, you have losing weeks, sometimes you have losing months. You've got to be able to have that patience to sit around and just continue trading your technique. And at the end of a month, you add up all the dollars, and you'll find you're doing well. But in between, it feels like you're actually losing because the market just isn't the way you want it to be. So, all right. So for today's analysis, there isn't much more than the one I did literally 12 hours ago. There's more or less the same signals happening here. Let's just go back to the previous one. Yeah, still, I would say still go with the same signals that are going at the moment. No, that's fine. They all still valid. Unfortunately, a lot of them have already run, so a lot of them have been missed, and a lot of them have run nicely and then reversed. Like there, that was a really nice breakout there, and then it's reversed. That's funny. That one was over there. It broke out there out of that trend line, broke out and then reversed. And I'll just show you a trick when you're using candles to trade. Now, a pin bar is regarded as one of the strongest reversal signals that there is. And if you look here, these are the kind of pin bars which are like, it's a bar with an incredibly big wick, but normally a small body. So something like that, pin bar, pin bars. So pin bars are regarded as very strong reversal signals or reversal candle formations. Now, one thing I learned early in my career about candles is that, for instance, you see that is a red candle going down there, and I'll just increase the size. I just want to make this point. That is a red candle going down there, and then suddenly it becomes a blue candle going up. Now, if you add those two candles together, you get a pin bar. So if you add those two candles together, this becomes a straight line, and you have a little body, and that. So then you get a pin bar. So sometimes it's important to not just look for pin bars, but to look for pin bars that are actually there disguised. So there's an example of a pin bar. Let's see if we can find a real one. That's a sort of one. but if you add them together, then you really get a genuine one. So and there's an example, and so that's a reversal candle formation when you have a pin bar type of that over there is more or less what a pin bar looks like. Over there it did reverse a little bit, but not as strongly, but this looks like a good pin bar. So that's just a little tip that I've noticed from looking at the charts today. There's a lot of little pin bars. That's still valid. That's, take that one out. That still could be valid. That although that's not a really good signal at all, and this one's valid because it's crossed the 50 line, and it is resting on support. If it should break that support, it's going to go a very long way. So I would still stick with my sell prediction there if it breaks that. And let's go to the next one. All right, yeah. Again, it broke out beautifully, ran quite a lot that it ran. No, not that much. 80 pips, hit like what looks like a brick wall, and then reversed. Now, these reversals also often happen at the open of a market. Now, what could have happened there, and I think it's about right. You see it's 1 candle, 2 candles, 3 candles back. That's 12 hours. That's more or less when we did the previous webinar. So you often find that the US market will reverse the direction of trend, and in fact we've got an EA that trades that. It's called the power punch, because this is truly a power punch. The market's going down very strongly and it gets punched up, and the US market reverses the trend, and you'll find these funny movements where you say, my goodness, look at that trend, and then suddenly it gets reversed. That's the US market reversing the trend. Okay, so let's have a look. There's no real signals now at the moment, because that break over there was actually the signal. And often when a break like here, it's still going on. When a breakout happens, you just got to sit and watch it until it's finished, and then look for some more. And at the moment, we're in that position where we can't actually see much more for this particular session. I can't see any great setups. They're still playing out, as I would say. See, there's a breakout. It's still playing out. That's playing out. There's nothing setting up. This looks like it wants to continue. So there was a big breakout, then that pin bar formation. So you add all of those candles together and you get a pin bar. The Oz looks like it wants to go down. Let's just see. But there's no real signals that you can follow. But it certainly looks all right. Look, I'm not going to. There's virtually no trades for today except those continuation trades on the daily charts. Some of them still are playing out, so those would still be valid. But other than that, I don't see anything standing out. That particular one, yeah, that one I still fancy, and that one also still fancy that for a sell. All right. Any comments, questions, or remarks? Thanks very much for that question about the back testing. As I say, I try to make these webinars support webinars where I can educate and answer questions, and that turned into a semi tutorial on optimization. In fact, that is how optimization works. It's just that with bigger EAs, you're just optimizing more and more variations. While I'm here, one thing I'll just mention about optimization, just give you an idea. If we wanted to optimize everything, and I don't know how this thing works, but if I wanted to optimize like that, and maximum risk, I wanted to optimize let's say 0.1, and I'll go to, let's say 7. I'm just going to go ridiculous here. And just to complete that tutorial, 01, I'll add to that, and then we'll go to about 7. So now what I'm saying is optimize the whole EA, not only the key ones, but everything, optimize everything. So what's going to happen is it's going to come up with about, it might come up with thousands. It might come up with thousands of alternatives. Then you use this genetic algorithm and you click it, because then it will, this algorithm's clever, it only goes for the most likely positive results, and it saves you time when you optimize. So I'm just going to, you see I've got it clicked there, I'm going to run it quickly, and then it will go out and work out. Oh, it's that you see it did 8,000 options out of 5 million. So what I had created there was 5 million options. The algorithm said, no, I'm not going to do it 5 million. I'm going to get it 800. And you go and you look and you see, oh, now look at that. Now suddenly it's 106,000 is the best result. Previously it was 176. So optimization, you can do magic with optimization if you really want. Okay, so if you're optimizing very few numbers, you don't use the algorithm. If you optimizing lots of numbers, you use the algorithm. And look at what it's done. I mean, it's 100 and this is a very simple, straightforward EA, and it's saying it's got the potential to do $106,000 over 6 weeks. Okay, so from me, Alex Deploy, thank you for attendance. Thanks for the questions again. And unfortunately, there's nothing great to trade. Have a look at those daily chart signals that I've got. You could even say, or you can even take guidance from those signals by trading shorter time frames, like the 15-minute time frame. If the daily is saying sell, then what you do is you look for sell signals on the 15-minute or the 1 hour, things like that. So that's another way of using bigger signals, bigger time frame signals when you're trading. So from me, Alex Deploy, cheerio.